This is Mark Carrington from mybitcoinprofits.com. This video is the next in the series on identifying trading opportunities in Bitcoin. The last video was done on March 18, and you will recall, and you can see in the picture in front of you, that Bitcoin was trading in something of a triangle, and quite frankly, it's pretty much in the same place. So the question has been asked, what to do when an instrument trades in a triangle like this. So what I'll do is I'm going to go back to first principles, and I'll put a naked chart up, and then just start working out what the possibilities may be. So let's start doing that. So the chart in front of you is Bitcoin against the US dollar, and you can see quite easily here that if we go from this high over here through here, I'm using a daily chart, so I'm going to change the color of this line to red because that's my protocol, and we will see here that if we use this low here, or quite frankly I can use that one there, but I prefer this one because this is where the reversal has come through. We're clearly sitting in a triangle, and our preference always is to wait for the break, out, down, and then trade, or to come down, retest, and then trade. And as it happens, we're really close to that breakout. These bars are becoming progressively smaller in size, and we do have a continuing series of higher lows, and we've got some spiking going on the highs. The highs are rotating in quite a tidy way, so we're pretty confident that when this thing breaks, it will break pretty hard. So the question is that do we just sit waiting patiently, or there are other things we can do? So I'm going to start with a naked chart and then just go through the processes that I run through. The first thing that I do is I go back to draw. So this is now, I've gone to a monthly chart, and I'm going to draw in some lines, some horizontal lines, to show where the reversals are. The monthly chart, and my monthly protocol is yellow line. So we've got a reversal here. I'm going to focus on the recent ones and on the ones that are around price action. So there's actually one here which is around the current price action. So that's a clear reversal there, and that's step number one. And then I want to identify what the trend is. It's quite hard to identify a trend here because we've got this huge spike up here, and then the drop off, which was provoked by the Chinese changing the regulations and the failure of Mt. Gox. So it's hard really to draw a trend taking into account that spike, especially off the monthly chart. Maybe we're more comfortable to do this off the weekly chart. So I'll change the weekly, and let's see what the weekly tells us. I'm going to squeeze it in so I can see the high. So we have here, certainly in recent times, we have rising lows. So it certainly looks like there is an uptrend here. And then my other protocol is that when I'm drawing trend lines, we're always looking for the most touches, but on a weekly chart, I typically draw the trend lines from the bottom for the touch. So I've got several touches here, no touches here, and that is my weekly uptrend line, and that will be a green line, and to tell me when I look later on other charts that it's a weekly chart, that it's come from a weekly chart. Now let's try to understand this downtrend. So we could draw a trend in here. So we can see we were trending downwards. If we go from that one, or if we go from this one, and it's probably a tidier one, because this is an aberration here in the market conditions, but either will produce the same result. We've clearly broken that downtrend and then started doing what markets like to do. Markets like to do one of two things. They like to go up in channels like this, and then they like to consolidate in channels like this, and then they will continue if they're going to go up or if they're going to change directions. That's what they like to do, and this market is clearly been doing that. If I change the method of drawing this line to drawing it as a parallel channel, so I'm going to do it from there to there, and you'll see what markets like to do. A parallel channel probably looks like this because it's the most touches. It's not a very tidy channel because it's actually not reaching down to the bottom of the channel. But let's see if we can do the same on this side here. Go through those. Not enough touches at the top either, so it's not really respecting channels in the way that other markets do. But the one place it does seem to be respecting a channel is here. There's certainly more respect here, because we've got 2 touches at the top, and we've got close to 1, 2, 3, 4 touches at the bottom. So that's our picture on the weekly. So our view is that we've broken the downtrend, we've consolidated, and we're now running in an uptrend, although there is some resistance up here that is stopping price from breaking out. So let's draw that resistance in by looking for the horizontal lines for the major reversals that are on the weekly, that are coming from the weekly chart. So there's clearly a series, there's a reversal here, there's a clear series of touches here. We'll make this a green line, and let's see where it's respected. Where's the best place to draw that line? Let's get that box out the way, and then we've certainly got touches there. It's always better to do them on reversals, so I quite like that one there. But we've got it's either choice of doing reversals or doing multitude of touches. It's not totally been respected that well, but the one that is being respected a little bit better is this one here, and that's actually a very important level, because it was respected there for that reversal, and then it's been one of the lines that's holding the market back. And we can see quite clearly that the downtrend is from there through there. 1, 2, 3 touches, 1 close touch. So the market is being resisted by this downtrend line and by this horizontal line which has come off the weekly chart. And while I'm on the weekly chart, it's always useful to have a look and see what the momentum indicators are telling me. And for me on the weekly, I like using MACD as my preferred indicator. Just basically what I want to test is to see how bullish or bearish the market is. So here we can see there's the 0 line, and we can see we're above 0, although the signal line has crossed underneath, which means that we are doing what I like to call a phase 2. So phase 1 is the market has run up here, and I'm going to line this up better. So we've got the crossover here. So phase 1 is here, and it's run to there, and then we're in phase 2 because we've not yet. This curve is now running down. It's still bullish because it's above 0. But it is tracking downwards. It has been flattening out. So this is what we call phase 2. And trend traders like trading when phase 2 ends. So basically what they're looking for is for a reversal price action around here at the end of phase 2 to go long. So MACD on the weekly is bullish, and it is in phase 2, and we've not yet had confirmation of the end of phase 2 from the MACD indicator. So now if we go on to, that's enough analysis on the weekly. Now let's just see what the daily is telling us. So now we've seen all our lines drawn in from the weekly and the monthly. And we can do just a few more. So we can see this is the triangle that's come off the weekly. So the triangle on the weekly is pretty well the same for the daily, the downtrend side of that, but the uptrend of it is a little bit tighter. And what I quite like to do on the daily is to actually draw the trend line through the closes. So all I've done is I've converted this to a line chart which draws in the closes, and there I can say, well, 1, 2, 3, 4 touches. And in fact what I'm going to do is I'm going to do it like this, because then I get 1, 2, 3, 4 touches as well, but I'm going back from further in time, and so that is my uptrend, my short-term uptrend line on the daily. Now, what else do I see in the chart? What are making me somewhat concerned is it's these series of lower highs. This is really my concern. We go lower there, we've gone lower here, we've gone lower here, but we have gone higher here. So from a short-term trend line point of view, short term, we could actually argue that we have broken out of that short trend line. So technically there was a trade opportunity 5 days ago. As I'll talk about price reversals, we've got broken out of the short downtrend line. So we've broken out, we've retested. Now, did we get the right sort of price action? This bar here is an inside bar. This bar here is a so we do not have a ring low yet, because we're still not past this high. So we've got a series of small bars, and we have no engulfing bars, so there's no really clear indicator of a price reversal after this touch on this short-term downtrend line, which coincided with this line. And while I'm here, let's just put in the horizontal lines that are pertinent from the daily, from a daily point of view. And I will do that using the lines, because I think we may get some clarity. No, we can't say that we are. There's a line there, there's a line there. That one's probably the most pertinent one. The reason it's pertinent is because it's got a touch here, there's a touch here, a touch here, and a touch here, and it's testing that level at the moment. The one below that is harder to pin down, because there in fact are only 2 touches in it, and there are no touches in the recent past. Now, I always used to say to my coach that your chart is starting to look like a bunch of railway lines, and as soon as a chart is looking like a bunch of railway lines, it is hard to identify what the patterns really are. So what I'm going to do is I'm going to get rid of the railway lines. So this here is telling me that there is potential for this trade to be running upwards. What I want to test is see if there's a channel, and I can see visually there's no channel, but I will just show that to you. Now, if I can find the chart. Parallel channel. So if I do want to mimic here, as we go through here, we can see there aren't really any confident points that we can go and draw the tops of the channel. That's probably the closest one there is. So one could consider that we've bounced off the bottom of this channel and there is potential to go there, but we have to get through this daily horizontal, we have to get through this downtrend line, and then there is actually space further up. So quite frankly, as I look at all of that, I'm just not interested in trading. So let's do one more thing here. I just want to have and see what the momentum indicator is telling, what the momentum indicators are telling me on this chart. So now we're on the daily. Now what the momentum indicator is actually telling me, I'm going to be looking for two things. I'm looking for divergence, and I'm looking for the position of the MACD indicator relative to the zero line. So here we can see we're above zero, so that is bullish. We can also see that the blue line has crossed down below the orange line, and it is now flattened out and it has reversed. So we've got higher lows on here, but we also have higher lows here. So that is not divergence, that is convergence. We have higher highs there, and we have this one here is lower than that one, so we have higher highs there. So the momentum indicator is telling me that there is convergence. And let's just check, that's using MACD. And let's just use an alternate indicator. I'll use a relative strength index, sometimes called RSI, relative strength index. It's a 14-day period, RSI, and now what I'm looking for is I'm looking for divergence or convergence. And again, I can see that we have, that is convergent. We've got rising lows and we've got rising highs in recent time. And then these ones here, this one mirrors that one, this one mirrors that one, so the RSI index is telling me exactly the same as MACD. So it's really telling me that there is not a lot going on. So I'm going to be waiting patiently for the breakout. My instinct tells me it's going to go up, and my analysis from the weekly tells me, based on this trend line, that it's going to break upwards. Now, of course, we can look at alternate Bitcoin instruments and see if they're behaving any differently. So the next one I'm going to look at is Bitcoin against the Chinese yuan. And this chart is, we're seeing the same triangle. Here's the triangle, and here's the triangle. What is interesting about this chart, though, is that this is looking a little more like a channel. Now I've got 1, 2, nearly 3 touches there. And then the question is, can you trade this as it runs from one side of the channel to the other side of the channel? It's difficult to do that because we notice this bar here is about the size of the channel. So ideally you want a channel that's running a bit wider than that. And what I'd look for the channel is when we come down to the bottom of the channel is I've got 2 lows that are reasonably the same, and I want to look for divergence on the indicator. So I want to see the indicator doing that, and this one is not doing that, so I'm not getting divergence. And this one here, when it came down to here, we've got higher lows, so it's convergent. So I'm not interested in trading a range. Now I could have traded this one going short when it reached to the top of this range here, and I would be looking for this. We've got a high there, a higher here, and I want this one to be lower. So there's no divergence, so from a range trade point of view, it's not tradable, but it's clearly worth exploring. So if we just have a step across to some of the others, Bitcoin against the euro. Now we know the euro has increased against the US dollar in recent weeks, and all I see here is I see exactly the same triangle. It runs from there and runs from there. Not interested. In the last 8 weeks, ever since the Brexit conversations began, the British pound has tumbled against the US dollar. And then but against a Bitcoin, what have we got here? We've got the same triangle. There. And there. It's absolutely the same triangle. So every Bitcoin pair is in the same situation. The little bit of exception here. This is Bitcoin against the ruble. There's some peculiar trade action. I think there's not much liquidity in this particular market, CXCO, but we do have a much stronger bottom. And if I could see divergence in here, well, there is a level of divergence in there going from there to there. There isn't here from here to here, and this spike here is when the courts decided they would prosecute people for trading in or participating in Bitcoin in Russia. And then the last thing I want to look at is, let's have a look at Ethereum, which has now become the second largest cryptocurrency. It has shown a very strong upwards move since it started its upwards trajectory at the beginning of this year, but it too is showing exactly the same triangle. Although it's breaking out, it's broken down below this particular triangle, so we may find an opportunity to trade this short here. My instinct though is that this is going to be the better trade. So that's the view of the Bitcoin markets, and quite frankly, they're just telling me to stay away from a trading point of view. There's still value in buying your Bitcoin and holding them long. Now, of course, there is a question that is worth asking is that if you believe that it's going to go long, why do you not just enter here, hold your position, set a stop loss, and then just wait out your time? And the answer for that is that, so if we'd entered here and we're waiting for it to run up to here somewhere, this particular trade, Bitcoin against US dollar, so basically what we have done is we've borrowed US dollars and we've bought Bitcoin, and we'll have to pay interest on that US dollar borrowing. So at the moment, if we'd entered above here, so if we'd entered above this bar here, so let's just draw a vertical line in there. If we'd entered over here, we'd be the trade would be profitable, although not produced a one-to-one return yet. A one-to-one return will be about here, will be up here somewhere, so we're looking for a return over here. The question is when is it going to get there? We've already got 1, 2, 3, 4, 5, so that's 5 days in which we're having to finance this borrowing. Now, of course, what happens if this thing does this, 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 and respects this downtrend line and keeps doing this, we will eventually have been borrowing for 10 days, 15 days, 20 days, and while US dollar interest rates are only at 0.5%, the official rates, the rate you get from your broker, is quite a bit higher than that. So that is why I do not like trading when a currency or an instrument is in a triangle, because you have to pay the financing cost, and eventually the financing cost can become very expensive. So while Bitcoin has been doing nothing, markets have been busy. And I'm just going to grab one just to show an example of why we wait for a triangle. So this is one we've seen before. This is XAG is silver against the US dollar. You'll remember shown you previously this breakout of this triangle, and look how this is run. Depending a little bit on how stop loss strategies were running, we would have probably got out of the trade maybe on that point there, or on that point there, and quite frankly you could still be in the trade now. But what we also see here is that there is a parallel channel emerging. I can draw it from here, although we may have broken out of that channel, and this is ultimately a whole lot more comfortable, because basically we trade up the channel down to the bottom of the channel, trade up the channel, would not have gone out of, would have got out of the top here, would not have gone in there, would have gone in here and would have lost the trade here, but we would have had 1, 2 run-ups, and ultimately when Bitcoin is sitting in its triangle, I'm just searching elsewhere for trade ideas. So that's enough for the review, a bit of a step back on Bitcoin. Happy trading and happy Bitcoining.